I think it's a first-class budget. I have a few reservations, but nevertheless, this is a budget for growth. Even more important, it's a budget for global competitiveness, for putting India right out there. Uh, I'm very happy to see that there is a push for cutting down red tape, of increasing ease of doing business. I'm glad to see at the same time that there's a very considerable amount of saying this is not just for fat cat corporates. There is a huge amount for every section of society, including the poor. Just some caveats. I mean, I find that the service tax is up to 14 and the excise 12.5. I thought we were going for a unified GST, so I don't really understand why those two figures have gone apart. I would have to add the revenue, the fiscal deficit. I am disappointed he did not stick to his word. He's having made the commitment last time he should have done. I'm further disappointed that the revenue deficit is as high as 2.8%, which means the quality of the fiscal deficit is not as good as it should be. Finally, all these data are presuming growth of 8 to 8.5%, on which there has been some question as to will this really lead all the revenue. And if you have a failure at that end, there will be some other problems. But taken on face value, I would say he has done a good job overall. It's a good budget.
Yeah. So I think it's a very good budget in the sense that first thing is that first time I'm feeling that a finance minister is listening to the suggestions and the problems people are facing. And I think one of the biggest thing which has happened is that the investment management facility has been given to bring the inflation investment management in India from Hong Kong, Singapore to India, and finally we'll have a international finance center in Gift City in Ahmedabad. I think that will be a huge development. Apart from that, the promise of corporate tax reduction from 30 to 25%. I think there is a this 5-year promise, but I think it is not known yet how much will be cut this year. But 5-year possibility is a huge thing. SARFAESI Act has been extended to all the NBFCs, small NBFCs. I think that gives a lot of teeth and to NBFCs. And and I think overall tax mobilization is very, very limited. So I think the burden is very little, and I think there is a all-round push for growth. And I thought that infra spend push is not big enough, but we need to see the finer points.
Okay, let me very quickly mark markets, and it's been a heck of a volatile day for the Nifty. Let's pull up the intraday graph of the Nifty, and there you go. First Nifty was up, then came some announcements, it went up by about 70-80 points, and now profit booking clearly has kicked in. 14-15 points down for the Nifty. The market breadth is not that supportive, but I don't think we should judge today's market momentary reaction as the market verdict. Markets had seen a huge run up yesterday, so a bit of profit booking perhaps was always on the cards. Ramdev, my question to you is that do you think the biggest hurrah for this budget is purely on the corporate tax side? Because if corporate tax rates goes down, automatically EPS will move up.
Yes, eventually it will move up, but the shorter end, I think that the clarity which is not there about the current year's reduction in this thing, and but then service tax going up from 12 to 14% is real. So the trade-off one has to see what is the total impact. But I think the infra growth push, infra spend push, of course that 70-80,000 crores additional thing is there. But apart from that, I mean 3-4-5% of GDP coming from extra budgetary resources and all, that doesn't seem to be coming through. So there's some kind of disappointment is there, and that would have been the source of huge growth immediately. And so I think bit of disappointment, but we need to see the finer footprints, what exactly they want to do.
Fair point indeed. Let's take it across to Punita Kumar. Punita, plenty of things as far as the financial sector itself is concerned. What is your first thing? The FII, FDI, the FMC merger, FEMA changes, which will allow capital flows to happen, the gold monetization scheme. Give us your overall sense of the budget.
No, I think it was a very pleasant surprise in terms of the fact that they balanced the needs of all segments of the economy other than the super rich, who are the only ones I think who've been impacted a bit negatively. I think the corporate sector, the rural sector, the thrust on education, health, senior citizens, youth, I think there's just so many segments of the economy that are going to benefit, and therefore I would call this a growth-oriented budget. And longer term, the trend is to simplify the tax structure, which will make ease of doing business in India much easier for foreign investors. So I think it's going to help both domestic investors because you're deepening the bond markets, and it's going to help the foreign investors. So I think for investors in capital markets, also this is very strong. It's good for the corporate sector as well. So I think most all segments of the economy are benefiting, and I think that's really going to help growth.
Right. I think we've got Mr. Sanjay Reddy also joining us here live at the CII setup. Mr. Reddy, there's been a concerted push towards infrastructure.
While he's getting ready, let's take it across to Maithili actually. Maithili, like everybody has been saying, it's a balanced budget. He's spoken to corporate India. He's also taken care of the middle classes. There's a plenty of push as far as social sector schemes are concerned. Do you believe it's a balanced budget? He's spoken to all stakeholders of the Indian economy?
Well, I'll differ a little bit from Swami. I think it is definitely a pro-growth budget, but through the corporate route. So definitely pro-business and pro-overseas investors. I'm not sure that much has been really done for the poor. I think the hope really is that the public investment that the government is driving, that will help the lower classes. But there are many things, I think, particularly making EPF optional, which goes against the interests of the poor. So it is definitely pro-business, pro-overseas investors. I don't think enough has been given, despite the alphabet list of schemes for the poor. I think the poor have really not been taken that much care of as they should have been for a government which claims to be doing so.
Right, I think we've got the view from our editors. Let's get a view from corporate India. Chanda Kochar, MD and CEO of ICICI Bank, Sanjay Reddy and Sunil Munjal joining us right here. Ms. Kochar, if I can ask you first, what's your assessment of the budget? Swami believes it's a first-class budget. Markets have given it a thumbs up. Do you believe this is a pro-growth budget? Right. Ms. Kochar, if you're getting my audio, Swami has given a big thumbs up to the budget. Markets believe it's a good budget. What's your assessment? Do you believe this is a pro-growth budget?
Yes, I think it's actually a very good budget because, in fact, it's a very fine balance between growth, inclusiveness, and fiscal discipline. So it's definitely pro-growth. And at the same time, as I said, it takes into account fiscal prudence as well as inclusiveness.
Right. Ma'am, if I may ask you, there's plenty that's been done on infrastructure. We will address fiscal deficit in just a bit because the House is divided there, whether he has been pragmatic or not. If I can just ask on infrastructure, do you believe enough has been done? 70,000 crore additional expenditure, but yes, he's talking about more bonds and a new infrastructure fund. Are you happy with that allocation?
Well, I would look at both, not just the allocation, but the entire direction that has been set for infrastructure investments. So, first of all, I think a very important thing to say that let's kickstart investment through the public sector units. I think that's a very, very good beginning and a very pragmatic way of looking at it. Then, of course, increasing the devolution towards the states. But over and above that, a lot of enabling things like the entire plug-and-play model. The entire relook at the PPP model, and of course, the dispute resolution and so on. So I think, the stage has been set for a much larger growth in infrastructure.
Very quickly, Manish, to your mind, what is the most defining part of this year's budget, and has the budget done enough to kickstart the stalled growth?
Well, Nikunj, if you think of the budget as a continuum and how this government has been redesigning the whole architecture of India, we're moving away from a command and control society to something where you're putting power back into the hand of the average citizen and the states. So if you think of the way they've gone about it, they've already done the Jan Dhan Yojana and the direct benefits transfer, which creates power back into the hands of the citizen rather than someone subsidizing you and then you going out and buying goods at a subsidized price. You are now pro-choice. Similarly, you've devolved power back from the center to the states so they can decide how they want to go ahead. So if what were the big things one was looking for in this budget was directionally, where is this country going? So you're in a way overturning the whole architecture of India away from the sort of Soviet or British imperialistic system which we used to have towards a more participative, kind of Republican or conservative society, which is directionally the right way to go. They've adhered to the path of fiscal prudence. They're giving more tax benefits away to citizens as well as corporate sector. They're investing more into infrastructure. So while the headline numbers may not look like they've changed, the proof of the pudding is in the fact that you're shifting from 80% revenue and 20% capex to incrementally going in the other direction, where over the next 3 or 4 years you'll end up doing 80% capex, 20% revenue, and in some sense rebuild the whole country. Also putting this social security net across various strata of society, and also providing means for people to, like I said, exercise their own choice, gives you a completely new architecture and a fillip to growth. So we're tremendously excited.
It's a new architecture. Mr. Chokhani, let me just interrupt you here and get a quick word here from the panel here at CII. Mr. Munjal, the consensus view is that this is a growth budget. Are you okay with the fact that they've slipped on the fisc? They've allowed themselves a little bit more leeway to meet fiscal deficit targets. Is that okay with you?
Actually, we had recommended this. We said, considering that you need to increase public expenditure, current position allows you some headroom with lower oil prices and lower inflation, but may not be enough for the amount that you need to infuse. Because for the private sector investment to come in is taking longer than we had expected. The consumption is not picked up as quickly as we had expected. So there was a need for public expenditure to come in. So we are okay with this. I think overall, he's done something interesting. It's like a workman's budget. He's touched many, many small areas, but at the same time, he's made a few very dramatic changes. Things like introducing the bankruptcy law, things like overall looking at the restructuring of the public sector banks itself. I'm not sure how many noticed it actually slipped in very quietly. But I think this is a transition to creating an independent holdco for the public sector banks, which would give them much more freedom to operate. So there are 2 or 3 on the financial sector system. There are some pretty interesting recommendations in there. Simplification of taking wealth tax away, but not losing the revenue. Right. Is adding that 2% to income tax, etc. So there are a number of moves that he's made on ease of doing business. I wish and I hope there's much more to come on this, because this is not enough. What he announced was good, but it's not enough. Right. But overall, I think it's a well-designed budget, especially considering where we are right now and where we need to get to.
He's been saying for a while there are 364 other days that he'll continue to work with. Mr. Reddy, if I may throw this to you, and particularly on your sector, infrastructure was supposed to be the big thrust. He's set up a new infra fund. He's talking about additional 70,000 crores being spent. He's talking about new bonds. He's spoken about rebalancing the PPP model. It was also announced in the previous budget, the 3P India. Nothing really took off there. How optimistic are you with what you're seeing right now?
I'm very optimistic because there are many things that he spoke about in infrastructure. I tried to count. I think he used the word more than 30 times. But I think the most important thing is the focus. He's given the maximum focus on infrastructure. A simple thing like even talking about PPP, the recognition that government has to take the maximum amount of risk, the rebalancing of risk, I think is a critical recognition that needs to be done. Obviously, that cannot be done through a budget. It has to be done through a more detailed program over the rest of the year. The amount of investment that they're talking about, even the fiscal deficit, I'm perfectly fine with making it, instead of 2 years, making it a 3-year target. But if it goes into the right sectors, the increase in expenditure, even a simple thing like fund managers, who just stay away from India. These are all small things, but I think they make a big impact, especially for foreign investment. People always find it very difficult to invest in India because there's so many, if I may call it, irritants.
Right.
So I think the direction is very clear that what the government wants to do. Obviously, the devil is in the detail and in the implementation of these. One has to see. But I'm very excited because there's lots of things. They're talking about number of projects. They spoke about 5 UMPPs. They're talking about ports, airports, roads being implemented, 20,000 kilometers. And more importantly, I think, he's also not just taking it away from a 1-year exercise. He's trying to push it to give more clarity over the next 3-4 years, whether it's in terms of income tax, whether it's in terms of other proposals. So overall, I think directionally it's very clear the worst is behind us. It's only a question of how good will it get.
It's a strong budget directionally. Ms. Kochhar, the CEOs here in the panel believe it's okay to have allowed some amount of fiscal slippage. Are you okay with the fact that the government is not sticking to the fiscal deficit targets? Do you think it's okay in its quest to revive growth? Is that okay with you? Swami isn't fine with this idea.
Well, I think it's a very pragmatic approach because, if you see, first of all, he's maintaining the current year's targets. And then, the journey has been increased from 2 years to 3 years. But As long as this money is actually going to go towards growth and is actually going to create all the multiplier effect in terms of growth, I think it's a very, very practical approach to find that right balance between growth, investments and fiscal deficit.
If I may ask you the question, he seems to have convinced the CEOs on our roundtable as far as the fiscal deficit map is concerned, but what about Governor Rajan? Do you believe the fact that the fiscal deficit target is going to be delayed by a year is going to impact the rate cut cycle this year, ma'am?
Well, I think, as far as that is concerned, one also has to look at how inflation moves. And I think a lot of the structural control on inflation could come through the supply side economics. The supply side is being focused upon in this budget. I mean, he spoke about agricultural productivity. And actually, if agricultural productivity improves, you can see a lot of positive impact on inflation. Similarly, all focus on increase in production, whether it's through infrastructure or through investments, can also create a positive impact. So I think it's always the question of course, fiscal and monetary policies moving together, but it's not just fiscal deficit number per se, it's really what growth and investments and productivity does to the economy.
Right.
Mr. Ayya?
I know Ramdev, who's our guest markets editor, also has a question for Swami, but quickly a question to Mr. Munjal. A corporate tax cut, that's something that India Inc. is going to welcome, a roadmap of a cut, and he's going to withdraw some exemptions as well. Is that a welcome move?
So actually, if you see our recommendations for the last 10 years, not 1 or 2, for 10 years we've been saying it will be sensible to reduce exemptions, but when you do, you also then need to reduce tax rates so that at least you're revenue neutral. Just make the whole system simpler so an average lay person and a small industry can actually understand what this is about, and take away the room for misinterpretation or multiple interpretations, which is where the friction comes in actually. And we have so many disputes in tax. The courts are backed up. The amount of money stuck in this is actually completely unproductive. So I think this is a very smart move. And he's done a little bit like what they've been doing in UK and some of the other countries. They give you advance notice. This is what we are going to do. Right. He's not done it from this year. He said it will happen from next year. So, I hope he can actually announce the actual timetable as well for the next 3 years, what it would be in each year going forward, and which exemptions will go away. We're actually okay with exemptions to go away. What we've said is, please use incentivization carefully, study each one and see where it's necessary. Normal exemptions should be taken away.
Yeah. Mr. Swami? One of the expectation in the market was that can the budget kickstart the economy, in the sense that there is not much of visible change in terms of growth on the ground. So do you think these budgetary proposals are good enough to give very quick start to the growth in the economy?
The budget certainly spells out an additionality that there's going to be that much more public investment, and that will definitely help. But beyond that point, the big question is, will we really be doing 8 to 8.5% growth? If we don't get that real growth, then I'm afraid you're not going to get the revenues with which the government is going to invest. So you have to cross your fingers and hope that this high growth rate is for real. If that is not the case, a number of the other calculations will all come tumbling down. But taking the figures at face value, yes, this is a budget for growth. It should be able to kickstart the process, not just directly, but I would say this will animate spirits. I think people will say that this is a good budget, this is a government that means business. It's not just a question of spending more money. There is a clear move to reduce red tape, reduce discretion, reduce disputes, settle things and get moving. So I think that larger picture is a positive.
Right. I think we've got, we touched upon some of the tax proposals, and we have one of this country's finest tax experts, Dr. Parthasarathi Shom, also joining us live from Calcutta. Dr. Shom, thank you for joining us here at ET Now. How do you read the whole host of tax proposals in the budget, the move to cut corporate tax over a 4-year period, the move to hike service tax, and also a lot of move towards easing tax litigation as well? We've seen some drastic steps there as well. How do you read these proposals, sir?
I must say that I'm duly impressed by the tax proposals, and the pre-announcement of the reduction in corporate tax over 4 years is an excellent idea. Many countries do it, and now Finance Minister has taken the step to do the same, so businesses can plan much better. Second, in terms of the service tax, it had to be done at some point, and he's bitten the bullet there. At the same time, the surcharge on the super rich was also called for, because it compares now somewhat in terms of other countries like South Africa and developed countries, where at this 1 crore point, their marginal rates are much higher. So all in all, I would say that in the overall direction, it has been very impressive on the tax front. However, some of the issues, when you go into the nitty-gritty, he will have to follow up a little more. He said that on the indirect transfers issue, that there will be a circular brought out by the CBDT. It has taken them a long time, and they must follow up very quickly. I'm sure that CBDT has assured the finance minister, and that has to be done. I'm very glad that on GAR, he has taken given a 2-year reprieve for implementation. But the most important thing is for proper training of the tax officials in order to carry it out. And similarly, overall, in terms of the GST, his approach to bring it next year, one would have hoped he would give a little more in terms of the direction of how the structure will be coming out, but I'm sure that we can expect it.
Fair point indeed. But Satish, hold your thoughts there. I'll come across to Sanjay Reddy here. The whole taxation bit, he's tried to address taxes for everybody. Of course, corporate tax is going to be cut over the next 4 years. The tax resolution, the new dispute resolution thing where a sovereign can actually settle with another company, a multinational, is that a welcome move?
I think so. There's a lot of new ideas that he's come up with, whether it's that one, or whether it's in public procurement, or setting up separate commercial wings of high courts. So I think the whole thinking is that it's around make it much more predictable, much more easier to handle tax issues, and also in terms of ease of doing business. So I certainly agree that will make a big difference. And many things around foreign investments, merging some of the different categories. So I think all these things are in the right direction.
Right. Mr. Reddy, thanks for joining us. You spoke about ease of doing business. Ms. Kochhar, the Prime Minister promised that he will work towards reducing the ease of doing business. Do you see enough in terms of detailing in the budget that will address this big concern of corporate India to improve the ease of doing business?
Yeah, not reduce, but improve ease of doing business. Clearly, I think actually this point has been touched upon in various forms. I mean, first of all, when you talk of the plug and play model, I think that itself goes to say that we will create a project ready and then hand it over for investment. Then you heard about, the e-biz portal, where all the approvals can be kind of combined and they could be tracked on the electronic basis. Then you had the reference to the fact that you can actually start business without prior approvals and then actually take it, get regulated thereafter. I think that's again a very, very important point towards ease of doing business. Also, there are some important points which in a way combine not just ease of doing business but enhance business in India. For example, this whole permanent establishment tax on the funds. I think we've been saying this for very long, that there are businesses that are done around India, around Indian investments by Indians, but all that revenue goes actually to countries, to the other countries, because those businesses are not done from India. And if we talk of setting up financial centers in India, I think that's actually what we need. So I think there are various ways in which this ease of doing business has been touched upon and in the right direction.
Ms. Kochhar, thank you so much for taking the time and giving us your views on the budget. Really appreciate that view from corporate India. Chanda Kochhar, live and exclusive right here on ET now. But let's address the market as well, because after initial strong reaction to the budget, we've seen the market come off some of those highs. In fact, now Nifty in the red. Nikunj, take it away.
It's highly volatile, and that's what you expect on every budget day. So I have with me Shankar Sharma and Prashant Jain. Both these men need no introduction whatsoever. Shankar, you go first. What do you think is the big idea from this budget? Ultimately, markets, they want earnings. Do you think the budget has done enough to aid earnings going forward?
No, I think the move on corporate tax is something that I personally have believed that India, in light of what happened after 2008, we definitely needed to cut corporate taxes to spur investment, and I'm very, very, very pleased to see this move. And we do business in the UK, and now UK corporate taxes are something like 20% down from north of 30% when we started doing business there 10-15 years back. So for a lot of our international transactions, now we actually choose the UK as a jurisdiction rather than go to a jurisdiction where you might not have any tax, but that they're not supposed to be very, very legitimate jurisdictions. So you can see how much investment flows back into the UK simply because they cut taxes. I hope this 25% over 4 years actually happens, and I'm pretty sure when that happens, you will find a lot of investment coming into India to take advantage of these low tax rates. So for me, that one single thing overrides any other positives or negatives in the budget. As far as the market is concerned, that's a different kettle of fish.
Right.
I think they had run up a lot before the budget, so there is always room for disappointment on some factor or the other. But
Right.
For me, he has done a terrific job when he talks about reducing corporate tax rates to 25%.
Okay, Prashant Jain, for the longest time, you've been making a point that India needs to kickstart the broken down investment cycle, focus on the capex. Has this budget done enough to satisfy you as a money manager?
I think this budget is a very good budget, and it has done the right things for improving the capex cycle, and there are quite a few initiatives. The budgetary allocations have gone up, and I think if you read this budget along with the railway budget, then it becomes very apparent that road, railways, power are the key focus areas. The National Investment Fund is being set up, and there is room for the tax-free bonds in these sectors. I think I am quite pleased that this budget is doing a lot to improve the capex cycle, and there is some reforms planned even on the banking side, which the bankruptcy law being planned over time, I think will lead to higher credit flow to this sector. Yes.
Prashant, one of the things is, I think there was a distinctly strong mention of the fight against the black money. Apart from the money stashed in abroad, I think he talked about Benami transactions in real estate here, and I think he's tried to curb that, because a lot of savings are going in that particular segment, and one of the problems with that segment is that once you are stuck in that mode, you can never come back to official channel. So do you think that's a game changer? It's a big one in terms of what is happening in real estate market?
Ramdev, I don't know the details. It is too early to comment, but I think a lot is being done to encourage financial savings and to reduce physical savings, whether it is gold, whether it is real estate, whether it is increasing transactions through credit card, debit cards, gold bonds. So I think there is a serious attempt being made to encourage more financial savings, and I think over long periods is very good for both the capex cycle and for general economy. Yes.
Sunil Singhania, everyone on our panel seems to be applauding the budget. So let's find some fault lines, and if you can't find one, let me give you a hint. Tax-free bonds, which is bad news for a SIP and equity investor.
Frankly, from my perspective, the event is behind us. We make a lot about an event. The finance minister has clearly said that it's not only in the budget, but in the next 3, 4, 5 years, they will keep on taking steps which is needed for kick-starting the economy and taking it to its rightful place to double-digit growth in the new series. So I think, we are very positive on the economy and the markets. I think the budget was an important document. It is behind us. Now let us focus on what the positives can be, and very clearly both the macroeconomic and the government support is there for the economy. And as long as returns are made, we are not bothered about investors. Investors are smart enough to find their way into assets which will give them good returns.
Right, Mr. Som, I'm going to change the scope of the conversation and talk about GAR, the thorny issue which bothered everyone, or which has bothered everyone. Now there is a clear timeline. It's been deferred by 2 years. but is that enough? Mr. Som?
I think it can be enough. The important thing is, exactly like in the problem of transfer pricing adjustments, where we are off the map internationally, same could happen in the case of GAR if it is implemented without appropriate training of the officers as to how internationally GAR is applied. So if it is taken seriously and training is carried out, then I think GAR is a good instrument and it should be applied. But this training and lack and overconfidence both cannot go hand in hand, and I think that is what we should be looking out for. And also I must say that in the TARC report, the Tax Administration Reform Commission, I was very elated that Finance Minister actually said that it is an advanced stage of examination. And and there also it's a matter of ease of doing business and GAR, they are all involved. So I think that they are working very much in the right direction in these matters.